Banks coming today from Banks Credit Chat, giving an update on Management International. Now, I did a couple of videos in the past about Money Management International, and this one just gives an update about how they're operating now and what it appears to be. They're functioning more like a debt settlement company instead of a debt management company. And I've done a video in the past talking about how Money Management International has changed since the time that I worked inside there. And when I was there, I saw the changes happening right in front of my face. They were functioning more like a profit company. But now they're even taking on tactics like a debt settlement company. And let me give you an example of what I recently had a conversation with a family member in regards to how they're operating with Discover now. Discover has always been a troublesome card for the debt management program under typical guidelines. And this was one to ClearPoint and any other one. ClearPoint before it became Money Management International. They always had a little back and forth a little bit. But typically they have a guideline that, you pay about $25 under the debt management program, and that, depending on the balance, and that usually pays that particular card off over time. Now, recently, according to the family member, they had the Discover card under the debt management plan, and Money Management International was actually paying less than the guidelines that was kind of spelled out under Discover's program. What makes the story even worse is that situation even worse, I should say, is that Discover was not, even though they were paying Discover monthly, again, as I mentioned, it was less than what is the typical guidelines for operating like a debt settlement company. Because debt settlement companies typically function in capacity. We'll pay them this amount, and it impacts your credit report because they don't have to accept the amount. What I was surprised is that Money Management International prides itself on being the largest nonprofit, and usually because you have that base and guideposts, you have the relationships already set up with the banks, because banks, how the debt management program works with functioning in a nonprofit again, a lot of the banks already made relationships, and they give fees to the nonprofit company. That's the best way to explain it. They call it grants or something like that. It's usually fees for getting X amount of people under the debt management program, and they're paid in that capacity that the company is paid in that point. But as I told you before in the past video, and I would encourage you to look at my videos in the past about Money Management International, when I was there, especially when it was getting started and really moving on and getting it, they were really pushing the debt management program, and they were even giving bonuses to any of the counselors there who, if they could get people in the debt management program, you get a bonus because of that. And that became the focal point, because that's how they were getting money, not only from the credit card companies, as well as they can also back-end fees, and everything became a charge on either to the consumer itself, because they do doing student loans, or even to the fact of they were then going back to the credit card companies. Typically, if it's a profit company, this is not an issue because everyone has to make money. But when you start pushing the tactics of a profit company, or in this case, when they're doing with the Discover card, like a debt settlement, where you're actually having the client, a customer, consumer, coming to them in trust to say that you already have the relationship, you're already working this already out, and I'm expecting that when I'm putting this card under the plan, that it's going to be taken care of and essentially put me in a better standing. In this case, it's only $6. It was a $6 difference, because the minimum payment that Discover would take in this case with the family member was $25, and they were offering $18. Yeah, it's $25, $6. So it was a $6 difference. I have to double check my math. It's a $6 difference, and such a minuscule amount. You wouldn't think that they would do this, but they did. And not only that, they didn't even let the family member know that the Discover card was not actually accepting the payment plan. So they kept getting calls from Discover saying, "Hey, why are you not making a payment? You used to make the payment before." And of course, they were dumbfounded, like, "What? I thought they were on the debt management program." Well, no, we didn't accept their plan, and it was actually impacting their credit. They got 2 months behind, which is just 60 days behind, which is the same thing you could do with a debt settlement company. They would function in the same capacity as a debt settlement company. That's what debt settlement companies are known for. They're stating that they can get the creditor would take pennies on the dollar and pay less, but that's not what they're supposed to stand for. So essentially, the family member worked out the payment plan with Discover directly. Comes out to be better, and of course they can't get the impact that it had on the credit report initially, but by over time it will improve the score as well. So something to be mindful of if you're going to use Money Mansion National. Do not put the Discover card on that plan, and watch out for their tactics. It's just becoming more and more troublesome as I'm keeping finding out new information that they function more like a profit company, and they're even doing some debt settlement tactics. Now, I can't say that as a whole all cards are going to be like that, but Money Mansion National has the umbrella of the nonprofit, which gives you the basis that they're going to be more in the consumer's interest because they have to function by all of these particular guidelines as a nonprofit, and you're building trust. But from someone who worked on the inside, working for that company and seeing how it changed over time, not for the good, unfortunately for the worse, something to be mindful of. Can't tell you not to utilize them because they are the largest nonprofit company out there, and they tend to have the best relationships with creditors for, especially for credit cards and stuff like that, and even a lot of collection accounts. If you have a collection account, they can work those relationships out. But as they continue and people strive and continually strive for more and more yield, and everything is now becoming just such a profit base, even nonprofit companies you just have to you can't go in there and function in a blind trust and as a blinder. Be mindful of everything you do, and especially if you're on the Money Mansion National, I would encourage you not to if you're going to utilize them, do not put the Discover card onto that plan. This video has been of value to you. Please subscribe, leave some comments, and so my next video for Banks Credit Chat. I'm out.